Have you ever wondered what happens when the relentless drive for precious metals collides with the shifting tectonic plates of global power? Imagine a supply line so strategic it makes the Suez Canal look like a garden hose. And yet, a mighty naval force like the US Navy finds itself watching from the sidelines as events unfold thousands of miles away. In the next few minutes, we're going to dive into a story of geopolitics, economics, and a metal that has been valued for thousands of years: silver. And you'll see why this isn't just another market update, but a pivotal moment in the reshaping of global influence. The rumble began deep within the vast expanse of Siberia, where Russia's rich silver veins have long fed the world's appetite for the shimmering metal. Russia, historically one of the top producers of silver, has seen its mining output fluctuate over the years. In 2023, Russia produced an estimated 2,000 metric tons of silver, making it a significant player behind Mexico and Peru. Silver isn't just used for coins and jewelry. In the 21st century, it's essential in electronics, solar panels, and electric vehicles, connecting the dots between ancient wealth and futuristic technologies. On the other side of the border, China, already the world's largest consumer of silver, has been on a buying spree, snapping up supply to feed its industrial machinery and investment appetite. Chinese demand alone accounts for roughly a third of global silver consumption. And when that kind of demand meets a willing supplier in Russia, the consequences ripple across markets and across oceans. Now imagine a land route. A phrase that sounds so benign it might slip past unnoticed in a newspaper. But this is no ordinary road. It's a geopolitical artery that links Russia's metal-rich interior directly into China's industrial heartland. With sanctions biting at Russia's ability to move goods through traditional Western-dominated logistics channels, China's overland connection has become a lifeline for Russian silver producers, looking for buyers with deep pockets and long-term ambitions. While ships and sea lanes are traditionally where great powers project strength, this new corridor runs over plains and through mountain passes, immune to blockades or naval posturing. And here's where the narrative takes a twist. The US Navy, despite its unmatched capability at sea, finds itself unable to exert influence over this overland trade flow, powerless to stop or redirect it. This isn't a question of military strength. It's a matter of geography, economics, and strategic choices made years ago that are only now bearing fruit. To grasp the significance, think of global supply chains like rivers. Most of the time, the big trade flows through ports and across oceans, and naval power has historically been able to protect or disrupt these rivers. But what happens when the river diverts inland? That's what China and Russia have engineered: a terrestrial waterway of silver supply that bypasses the maritime choke points and leaves traditional naval powerhouses like the United States with few options to intervene. If you're picturing a map, imagine a new artery carving its way through Eurasia, carrying a metal that underpins everything from investment portfolios to photovoltaic cells on rooftops. But let's break down why silver matters so much beyond its shine. Silver is often overshadowed by gold in the public imagination, but in the industrial world, it's indispensable. A single solar panel can contain upwards of 20 grams of silver. Electric vehicles can contain even more per unit. As the global push toward decarbonization accelerates, demand for silver is projected to increase by 10 to 15% annually over the next decade, outpacing traditional demand from jewelry and silverware. This has sparked what analysts call a structural deficit, where demand consistently outstrips mine production. When supply lines tighten, prices can spike. In 2020, for example, silver prices surged by more than 40% within a few months as investors sought safe havens amid economic uncertainty. Prices climbed from around $18 per ounce to over $28 per ounce in a remarkable run, reminding the markets that silver isn't just an industrial metal. It's also a financial asset with deep roots in human psychology. So where does China's new land route fit into this picture? In recent years, China has invested heavily in infrastructure that bypasses traditional maritime routes in favor of overland, corridors that connect directly with resource-rich neighbors. This strategy dovetails neatly with Russia's need to find reliable buyers for its commodities in the face of Western sanctions. The result? A steady trickle of silver moving eastward, often under long-term contracts that provide Russian miners with revenue certainty and give Chinese manufacturers a predictable supply. Imagine a pipeline of silver flowing not through steel tubes, but through rail cars and truck convoys, rolling steadily toward factories where that metal is converted into the circuits and cells that power modern life. Now let's bring the United States back into the frame. The U.S. has long relied on its naval supremacy to safeguard supply routes and uphold global trade norms. But when trade goes overland, between two neighboring giants, that dominance at sea counts for little. The US can't blockade a highway in Siberia without triggering geopolitical upheaval, and it has no legal jurisdiction to intervene in sovereign land routes. It's a stark illustration of how modern geopolitics isn't just about battleships and aircraft carriers, it's about infrastructure, alliances, and economic interdependence. And in this chess game, China has once again demonstrated strategic patience, positioning itself not through flashy displays of force but through steady, calculated moves. What does this mean for markets? For one, silver prices are reacting. As word of the land route's increasing volume circulates, traders are weighing the implications for supply dynamics. In early trading sessions following the route's announcement, cement silver futures saw heightened volatility, with prices oscillating between $24 and $27 per ounce as speculators tried to price in the new flow of metal. Commodity analysts point out that while the route enhances supply availability for China, it could tighten the market elsewhere, particularly in Western Europe and North America, where inventories have been dwindling. Silver stocks held in major exchange-traded funds, which represent investor holdings, have dipped slightly as market participants recalibrate their expectations. When markets adjust, they don't do so quietly. Price charts light up like city skylines at night, full of peaks, troughs, and trading volume that tells a story of shifting sentiment. And sentiment matters because markets are, at their core, reflections of human beliefs about the future. If traders believe that China will dominate the silver market and that Russia will find a dependable outlet for its production regardless of Western pressure, then investment flows will adjust accordingly. Some analysts warn that this could lead to a decoupling of silver markets, where prices in Asia diverge from those in the West, much like how there are different pricing benchmarks for natural gas in various regions. Imagine paying one price for silver in Shanghai and another in New York, not because the metal is different, but because the market dynamics and access differ. That's not just theory, it's a plausible scenario in an increasingly fragmented global econ. The implications extend beyond traders and into industries that rely on silver. Solar panel manufacturers in Europe, for example, may find themselves competing with Chinese firms that have secured cheaper or more reliable silver supplies, potentially tilting the competitive landscape. Automotive companies racing to build electric vehicles could face cost pressures if silver supply becomes more regionally constrained, and investors who hold silver as a hedge against inflation or economic turmoil will be watching these developments closely because when supply channels shift, so too can the value of assets. But this isn't just a dry economic story, it's a human one. Think of the miners in Russia's harsh northern regions, toiling in sub-zero temperatures to extract silver ore from deep underground. Think of the engineers in Chinese factories soldering tiny silver connections on circuit boards that make our phones and laptops work. Think of everyday consumers who may one day wonder why the price of a solar installation or an electric car seems higher than it should be. These threads connect across continents and industries, woven together by the flow of a metal that has been coveted since antiquity. And while the US Navy may be watching from afar, there are other levers of influence at play: diplomacy, trade policy, and economic incentives that can shape how nations interact in this new era. The question now isn't just who controls the seas, but who can build the most resilient and adaptable supply networks in a world where land, air, and sea all matter. As we watch these developments unfold, one thing is clear: the landscape of global trade is evolving, and precious metals like silver are right at the heart of that transformation, creating both challenges and opportunities for governments, industries, and investors alike. Opportunity now defines the next chapter in this evolving saga, because the flows of silver from Russia into China are not just a momentary spike. They are laying the foundation for long-term strategic leverage. Analysts have started to examine the broader economic and geopolitical ripple effects, and what emerges is a story of careful planning, timing, and the quiet power of infrastructure over sheer military might. Take, for example, the historical precedent of the Silk Road. It was not armies but caravans, merchants, and logistical networks that determined which empires thrived and which stagnated. Similarly, today's land route functions as a modern silver Silk Road, allowing China to secure critical resources while avoiding exposure to the vulnerabilities of maritime choke points, piracy, and naval intervention. The mechanics of the route are fascinating. Silver is transported in a combination of rail and trucking convoys, passing through customs checkpoints, designed for efficiency and security. Russian mining companies, particularly those in Siberia and the Ural regions, have entered long-term contracts with Chinese industria firms ensuring predictable pricing and supply schedules. These contracts often include clauses for future increases in volume, reflecting China's anticipation of growing industrial demand. especially in green energy sectors like photovoltaics and electric vehicles. The metal moves from extraction sites to regional hubs, then onward to Chinese factories where it is refined, alloyed, and transformed into everything from electronic components to investment-grade bullion. Think of it as a massive, meticulously coordinated relay race spanning thousands of kilometers, where every handoff matters, and delays can ripple through markets and manufacturing pipelines. Market analysts note that this overland corridor is also altering the global silver trade balance. Previously, Western markets, including the US and Europe, had more influence over price discovery due to their dominance in trading hubs like London and New York. However, with a steady stream of Russian silver entering China, Asian markets may increasingly dictate pricing trends. If this continues, we could see a shift in how contracts are negotiated, where benchmark prices are set, and how investors hedge risk. In practical terms, investors in the West might find themselves paying more or adjusting strategies based on decisions made thousands of miles away in Asia, underscoring the interconnectedness of modern commodities markets. But let's explore the economic incentives driving this partnership. For Russia, the overland route provides a hedge against the impact of Western sanctions, ensuring that revenue from silver exports continues to flow into its economy. Given that mining is capital-intensive, consistent cash flow is crucial to maintain operations, invest in technology, and pay workers. For China, securing a stable supply of silver is not only an economic imperative but also a strategic one. As the country continues to invest heavily in green technologies, including solar energy and electric vehicles, silver's role as a conductive and reflective metal makes it indispensable. Analysts project that by 2030, demand for silver in solar applications alone could reach over 1,500 metric tons annually, representing a substantial portion of global production. Without reliable supply channels like the overland route, achieving these production goals would be significantly more challenging. The geopolitical dimension cannot be ignored. The United States, while a dominant naval power, cannot exert influence over these land-based flows without risking diplomatic escalation. The overland corridor is entirely within sovereign territories, making direct intervention not only impractical but potentially catastrophic in terms of international relations. This highlights a broader shift in global power dynamics. Influence is increasingly determined by control over supply chains and infrastructure, rather than conventional military might alone. China's Belt and Road Initiative, of which this silver corridor is an implicit part, exemplifies this strategy by linking resource-rich regions to manufacturing hubs through a network of roads, rails, and ports. It's a silent but formidable form of strategic leverage. Industries are already reacting to this development. Electronics manufacturers in China gain a competitive advantage by securing silver at potentially lower or more stable costs, which can cascade down to lower prices for products like smartphones, tablets, and electric cars. Meanwhile, Western firms dependent on imported silver might face supply constraints or higher costs, prompting them to explore alternative sourcing strategies, invest in recycling, or accelerate research into substitutes. It's a vivid reminder that commodity flows are not abstract. They directly impact production costs, product availability, and even corporate strategies across continents. Historical context reinforces the significance of these moves. For centuries, control over precious metals has been a driver of wealth and influence. Spain's silver from the Americas fueled empires. British access to gold and silver facilitated industrial dominance. Today, the interplay between Russian silver production and Chinese consumption is shaping a new axis of economic power. What's striking is that modern strategies rely less on conquest and more on connectivity, contracts, and supply chain resilience. The overland route exemplifies this shift, proving that infrastructure and foresight can outweigh sheer military might in shaping the future of global markets. The implications for investors are profound. With China increasingly securing silver outside traditional maritime channels, market volatility in the West could increase as traders recalibrate based on Asia-centric supply flows. Exchange-traded funds, ETFs, and futures markets may reflect these changes, with potential divergences between spot prices in Asia and Europe. For those holding physical silver, understanding where the metal is flowing, who controls it, and how global demand is evolving becomes critical to making informed decisions. In essence, the silver market is no longer just a reflection of industrial demand or investor sentiment. It is now intertwined with strategic geopolitical maneuvers. Beyond economics, there is a narrative about technological progress and sustainability. Silver is not just a commodity, it is a key enabler of the green transition. Solar panels, electric vehicles, and advanced electronics all rely on silver's unique conductive and reflective properties. By securing this overland route, China ensures that its green technology ambitions are supported by a reliable raw material supply. This adds a layer of strategic foresight. Nations that control critical resources gain not just economic leverage, but also technological and environmental advantages in a world increasingly focused on sustainability. As we consider the broader picture, it's clear that the new land route is more than a simple trade channel. It is a linchpin in a rapidly evolving global ecosystem of finance, technology, and diplomacy. Investors, industrialists, and policymakers alike must pay attention, because shifts in supply chains can quickly translate into shifts in market power, technological leadership, and even geopolitical influence. The quiet, steady movement of silver across this corridor may very well reshape the rules of engagement in ways that were once unimaginable as it may have seemed just a few years ago. The strategic consequences of China's overland silver route are now becoming starkly visible, and the ripple effects extend far beyond the mining towns of Siberia or the industrial hubs of eastern China. This isn't just about the movement of a precious metal, it's about the creation of a resilient supply chain that can withstand political pressure, economic sanctions, and maritime disruptions, fundamentally redefining the rules of global trade. Experts are beginning to refer to this as a new era of commodity logistics, where overland corridors, regional partnerships, and infrastructure investments matter as much, or even more, than traditional naval dominance. The U.S. Navy's inability to influence these land-based flows underscores a larger reality. Control over resources in the 21st century depends on connectivity and foresight rather than just fleets and firepower. The operational mechanics of this route reveal a blend of sophistication and pragmatism. Silver extracted from Russia's prolific mines is first concentrated and purified at local processing plants, then loaded onto specialized containers designed for safe, long-distance overland transport. Security measures are robust, with tracking technology, armored convoys in remote areas, and customs processes streamlined to prevent bottlenecks. Once across the border, Chinese refineries take the raw silver and convert it into high-purity ingots or industrial-grade materials, ready for electronics, solar panels, and investment instruments. It's a seamless chain where timing, logistics, and contractual guarantees are critical. Any disruption could have cascading effects on global markets. To put it simply, this is supply chain management at a geopolitical scale, where a single rail line or trucking corridor carries the weight of national strategy. Market responses illustrate the delicate interplay between perception and reality. Since the establishment of the overland corridor, silver prices have experienced a blend of volatility and upward momentum. Futures markets in Shanghai and Hong Kong reflect confidence in continued supply, while Western traders adjust expectations based on shifting demand flows and inventory levels. Analysts point out that while the corridor reduces dependency on maritime transport, it also concentrates supply, making the route itself a critical choke point. Any disruption, be it extreme weather, geopolitical tensions, or logistical challenges, could trigger significant market reactions, underscoring the dual-edged nature of such a strategic asset. At a macroeconomic level, the Silver Corridor exemplifies China's broader approach to securing resources. Through its Belt and Road Initiative, China has invested billions in roads, railways, and port infrastructure across Asia and Europe, ensuring access to vital raw materials like oil, gas, and precious metals. Unlike military dominance, which is often zero-sum and confrontational, this strategy emphasizes interdependence, long-term planning, and risk mitigation. By controlling both the supply and the transport of critical materials, China strengthens its industrial base while limiting exposure to external pressures, essentially reshaping global trade networks to favor predictability and resilience. For Russia, the corridor offers a vital economic lifeline. Sanctions imposed by Western nations have complicated traditional export channels, particularly those reliant on banking systems and maritime routes. The overland route China ensures that Russian miners can sell silver at competitive prices without relying on intermediaries or facing potential financial penalties. This stability encourages investment in mining infrastructure, technology upgrades, and workforce retention, ultimately enhancing Russia's long-term production capacity. In other words, the corridor is not just a path for silver, it is an economic engine that sustains an entire industry under challenging international conditions. The strategic dimension extends into the realm of technological advancement. Silver is a cornerstone of modern electronics and renewable energy. Each solar panel contains several grams of silver, and high-tech vehicles rely on silver for critical electrical components. By securing direct access to Russian silver, China can accelerate its green energy goals while maintaining a competitive edge in global technology markets. For Western firms, this creates pressure to secure alternative supplies or invest in recycling and innovation to reduce reliance on silver imports. In this sense, the overland route influences not just commodities markets, but the trajectory of technological competition worldwide. Investor sentiment is also shifting in response to these developments. With a reliable overland supply to China market, participants are recalibrating risk assessments, hedging strategies, and portfolio allocations. Exchange-traded funds, physical silver holdings, and futures contracts are increasingly reflecting Asia-centric supply flows rather than traditional Western benchmarks. This creates potential divergences in pricing, liquidity, and volatility between regions, which can offer both opportunities and challenges for sophisticated investors. For retail investors, the key takeaway is that global commodity markets are more interconnected and strategically influenced than ever before. Historical parallels help to contextualize the significance of this development. Throughout history, control over precious metals has been a decisive factor in economic and political power. Spanish silver fueled European empires. British access to gold and silver supported industrial and colonial expansion. Today, the strategic silver corridor between Russia and China represents a modern iteration of the same principle. What is unique today is the method. Instead of conquest or naval blockade, influence is exercised through infrastructure, long-term contracts, and supply chain control. It is subtle, yet immensely powerful, illustrating how nations can achieve strategic advantage in an increasingly complex global economy. The human element remains at the core of this story. Miners in remote Russian regions endure harsh conditions to extract silver, logistics teams ensure the metal traverses thousands of kilometers safely, and industrial workers in China transform it into critical components for modern life. Consumers around the world, from solar panel buyers to electronics users, are indirectly connected to this flow, demonstrating how global supply chains link individuals, industries, and nations. This interconnectedness reinforces the notion that economic power is no longer just about local resources or military might. It is about the ability to coordinate complex systems across continents. Looking ahead, the overland silver route could serve as a template for other strategic commodities. Rare earth elements, lithium, and critical metals used in advanced technology may follow similar paths as nations seek to reduce dependency on vulnerable maritime routes and enhance resilience against geopolitical disruptions. The lessons are clear. Infrastructure investment, strategic partnerships, and foresight can yield advantages that even the most dominant naval powers cannot easily counter. This represents a fundamental shift in global economic strategy, one that places emphasis on connectivity, reliability, and long-term planning over traditional measures of power. The implications extend into diplomacy as well. Nations observing China's success with the Silver Corridor may seek to replicate similar strategies, while policymakers in the West may explore ways to secure supply chains through alliances, domestic production, or technological innovation. The interplay between economic necessity, industrial strategy, and geopolitical maneuvering is becoming increasingly intricate, highlighting that today's global markets are shaped as much by logistics and contracts as they are by tariffs, sanctions, or military deployments. In essence, the Overland Silver Corridor exemplifies the convergence of economics, technology, and geopolitics in the 21st century. It shows how nations can leverage infrastructure, contracts, and strategic foresight to secure vital resources and influence global markets. While the U.S. Navy remains a dominant force at sea, this development underscores a critical reality. Power today is multidimensional, and mastery over supply chains can rival or even surpass traditional military dominance. The silver flowing quietly across this corridor is not just a commodity, it is a symbol of strategic ingenuity, resilience, and the changing dynamics of global influence. The emergence of China's overland silver route from Russia has redefined the dynamics of global trade, demonstrating that control over infrastructure, supply chains, and strategic resources can rival, even outmatch, traditional military power. By bypassing maritime choke points, China secures a stable flow of silver critical for technology, green energy, and investment, while Russia gains a reliable economic lifeline in the face of Western sanctions. This corridor exemplifies the interconnectedness of modern markets, the strategic importance of foresight and planning, and the evolving nature of geopolitical influence. Investors, industries, and policymakers alike must recognize that in the 21st century, power is no longer measured solely by fleets or armies, but by the ability to move, secure, and leverage the resources that underpin the modern world. The silver flowing quietly across this land route is more than a commodity. It is a testament to the transformative power of strategy, infrastructure, and vision in shaping global influence, economics, and technology.